let us start with the final accounts of Bahadur, where the title will be in the books of Mr. Bahadur, Trading and Profit and Loss Account for the year ended March 31st, 2006. So first we are going to start with the Trading and Profit and Loss Account, where the format will be expenses or losses amount, revenues or gains amount. So here first we are going to start with the trading account, where the first entry will be in the debit side, opening stock. So let us take in the debit side opening stock, which we have 51,500. Then purchases, cash purchases we have 40,500. Let us take in the inner column. Then we have credit purchases 29,600. So the total purchases to the outer column will be 70,100. Then we have wages 9,400. Then we have sales, which has to be recorded in the credit side. Sales, even in the sales we have cash sales as well as credit sales. So in the inner column, cash 1,03,000, credit 1,21,100. So the total sales will be 2,32,100. Then we have closing stock, which is 41,700. After recording these entries, we have to close the trading account to find out the gross profit. So coming to the trading account, we have excess total in the credit side, which is 2,32,100 plus 41,700. The total is 2,73,800. So this is nothing but the gain or the revenue which we have excess than the expenses. So let us take the same total in the debit side in the same line, 2,73,800 minus the things what we have, opening stock, purchases and wages. So the balance is 1,42,800. That is nothing but gross profit carried down. So now to continue with the profit and loss account, what gross profit we have in the debit side of trading account has to be brought down in the credit side, so that we'll continue with the profit and loss account. So coming to the credit side, gross profit brought down 1,42,800. So here we have income again in the credit side. We are going to consider all the expenditures here which are indirect expenses. At the end again we are going to find that whether our income is more or expenses are more. So the difference will be either profit or loss. If our income is more, again the difference in the debit side will be net profit. If the income is less and expenses are more, the difference in the credit side will be net loss. So again we have to record the expenses which were indirect, where we have general expenses 20,700 and we have discount allowed 2,300 and depreciation on motor car 14,340. Then we have reserve for bad debts 2,750 and we have discount received. Discount received, when we are receiving, it is a income, so it will be in the credit side, discount received 700. Now we have to close the account to find out the net profit. So now we have excess total in the credit side, in the income side, which is 1,43,500. Same total we are going to write in the debit side, 1,43,500 less the payments or the expenditures what we have. The difference will be considered as net profit. So after deducting all the expenses or losses, the difference what we are getting is 1,03,410, which is nothing but net profit. So now we are done with the trading and profit and loss account, and we have to prepare the final statement, which is nothing but balance sheet. So let us take the heading balance sheet as on March 31st, 2006, where the format will be liabilities amount, assets amount. So let us start with the liabilities side, where first we are going to take the capital. So capital we have 92,500. Let us take in the inner column. To that we are going to add the net profit. So add net profit 1,03,410. Then the total will become 1,95,910. So from this we are going to deduct the drawings. So less drawings we have 24,000 and the total for the outer column will be 1,71,910. Then we have creditors, which is 24,200. Then we have bills payable, which is 10,200. Now we are done with the liabilities side. Now let us start with the assets. So coming to assets, we have motor car, which is 71,700. Let us take in the inner column because we have to deduct the depreciation. So less depreciation 14,340, and to the outer column we have 57,360. Then we have furniture, which is 30,000, and stock 41,700, and debtors we have provision for bad debts, so that has to be deducted. So debtors inner column 55,000 less provision 2,750, then the outer column will be 52,250. Then we have bills receivable, which is 16,500, and we have closing cash, so cash 8,500. After recording these entries, we have to see that our assets and liabilities should be equal, so the total should be tallied. So let us check the total of liabilities side, where we have 2,06,310, and the same total we have in the assets, 2,06,310. So here we are done with the preparation of final accounts of Bahadur with the incomplete information which is provided by him. Let us take the next illustration, from which we have to prepare the final accounts of Dinesh. When coming to the illustration, we have Dinesh does not keep systematic books of account due to lack of knowledge about the double entry system of accounting. He supplies you the following information. So where we have assets and liabilities as on December 31st, 2006. So where when coming to the sundry creditors, we have opening 45,000 and closing 48,600. Then when coming to the sundry creditors, we have 24,000 for the opening and 27,000 for the closing. Then we have cash 4,500 and closing is missing, for which we have to prepare a summary account to find out the closing cash balance. Then we have furniture and fixtures 15,000 for opening, stock 25,000, motor van 16,000. So for all these three assets, closing is missing, so that again we have to prepare a statement of affairs to find out the closing balance. Then we have the transactions during the year, in which we have cash received from debtors, discount allowed to debtors, bad debts written off, cash paid to creditors, discount allowed by creditors, sales returns, purchase returns, expenses paid, drawings, and rent paid. Then we have other information given, where outstanding expenses rupees 1,200 and charge 10% depreciation on furniture and 5% on motor van. Then Dinesh informs that he sells good at cost plus 40%. Then a provision of 5% on debtors is to be created. So by this information we have to prepare a trading and profit and loss account and balance sheet as on December 31st, 2006. So here let us first prepare the total debtors account, so that we can find out the sales. So coming to the title will be total debtors account, and format remains the same of ledger. So when coming to the debtors is the amount which we are supposed to receive out of our credit sales. So where debtors is an asset, asset always shows debit balance. So coming to the illustration, when coming to debtors, we have opening balance as well as closing balance, so that we can prepare total debtors account. Let us take in the debit side the opening balance, which is the balance brought down, and the amount will be 45,000. Then we have cash received. So out of debtors, what we are supposed to receive, from that we have received the cash. So that you are going to record in the credit side, cash received 80,000. Then we have discount allowed 1,400. Then we have bad debts 1,800, sales returns 3,000, and we have closing balance, where we are going to record it as balance carried down 48,600. So now we are going to close the account to find out the balancing figure, which is nothing but the sales. So when coming to the debit side, we have only the opening balance, and when coming to the credit side, we have all the entries where the total is excess, which is 1,34,800. The same total we are going to record in the debit side, 1,34,800 minus the opening balance, which is 45,000, and the difference is 89,800, which is nothing but the sales, the balancing figure. So same as when coming to the total debtors account, we ascertain the sales. So by preparing total creditors account, we have to ascertain the purchases. So when coming to the total creditors is what we have purchased on credit basis and what amount we are supposed to pay. So anything which is payable today or tomorrow, it is our liability. So coming to liability, liability always shows a credit balance. So the opening balance will be on the credit side and the title will be total creditors account and format remains the same. So let us take the first entry in the credit side, balance brought down 24,000. Then we have cash paid. So here what is the balance brought down? 24,000 is the creditors which we are supposed to pay. Anything which is paid here, that will be considered in the debit side. So cash paid 63,000, discount received 1,000, purchase returns we have 2,000 and balance carried down 27,000. So these are the entries we have in the debit side with the total of 93,000. So same total we are going to write in the credit side, 93,000, and the difference will be 69,000, which is nothing but purchases. So here purchases 69,000, which is balancing figure. So when coming to the illustration, we can see that when coming to cash, opening balance is given but closing balance is not given. So that we have to prepare a summary of cash. So where debit side we are going to record the receipts and credit side we are going to record the payments. So now let us take the title summary of cash and the format will be receipts amount and payments amount. So when coming to the receipt side, the opening balance will be shown first, which is given in the illustration. So balance brought down 4,500. Then we have debtors 80,000 where the payment was received from debtors. It is a receipt, so it will be in the debit side, debtors 80,000. Then coming to the credit side, here we are going to record the payments where the payment was made to creditors 63,000. So the entry creditors 63,000. Then we have expenses paid 6,000 and then we have drawings 5,000, rent paid 2,500. So here by considering the receipts and payments, the difference between these two will be the closing balance of the cash. So when coming to debit side, the total we have 84,500 and credit side total we are going to take same 84,500 and we are going to deduct all the payments. So where the difference is 8,000, that is nothing but balance carried down. Now we can see in the illustration even the capital balance is not given. So that we have to prepare a statement of affairs as on December 31st, 2005. So coming to the statement of affairs, we are going to prepare on December 31st, 2005. So the title will be Statement of Affairs as on 31st December 2005 and the format will be of the balance sheet where we will be having liabilities amount, assets amount. So coming to liabilities side, only the information of creditors we have that will be recorded in the liabilities side, creditors 24,000. Then coming to the asset side, we have debtors 45,000, cash 4,500 and stock 25,000 and furniture and fixtures 15,000, motor van 16,000. So by having this information, we are going to find out the capital in the beginning. So all the information what we have taken in the statement of affairs is the opening balances, so that we can find out the opening balance of the capital. So when coming to asset side, our asset side total is more. So where we have 1,05,500 and the same total we are going to record in the liabilities side, 1,05,500 minus creditors 24,000 and the difference we are getting is 81,500. So the entry will be capital in the beginning in bracket balancing figure 81,500. So calculation of closing stock, in that first we are going to take the total sales which is 89,800 less sales return which is 300 and the net sales will be 86,800. Then we are going to take total purchases which is 69,000 less purchase returns 2,000 and the net purchases will be 67,000. Now let us come for the concept of closing stock where so rate of gross profit on cost is 40%. Suppose cost of goods sold is 100%, then gross profit equals to 40% and sales equal to 40%. So hence cost of goods sold will be when the sales is 86,800, where we can remove 100% out of this so that we can find out the cost of goods sold. So here 86,800 into 100 divided by 140 is equal to 62,000. So 62,000 is what here the cost of goods sold. So how we have calculated this is the total sales is 140, but the 40% is the gross profit which is included in sales. So here we are doing a reverse calculation to find out the cost of goods sold, which is 86,800 into 100% we are going to remove out of 140, which is into 100 divided by 140, which equals to 62,000, which is nothing but the cost of goods sold. Now let us find out the closing stock. The amount of closing stock will be calculated as net purchases, which is 67,000, add closing stock 25,000. So cost of goods available for sales is 92,000, less cost of goods sold 62,000 will be the closing stock, where the balance is 30,000. By having this information, let us prepare the trading account, profit and loss account, and balance sheet. So coming to trading account, the title will be in the books of Dinesh, trading and profit and loss account for the year ending December 31st, 2006, where the format will be expenses or losses amount, revenues or gains, then amount. So when coming to the trading account, the first entry will be opening stock in the debit side, opening stock 25,000, then we have purchases 69,000 less returns 2,000, outer column 67,000. Coming to credit side, we are going to record sales 89,800 in the inner column, less returns 3,000, outer column 86,800. Then we have closing stock 30,000. Then we are going to close the trading account to find out the gross profit. So while closing the trading account, we have excess total in the credit side, which is 1,16,800. Same total will be recorded in the debit side, 1,16,800 minus the above entries. The difference will be 24,800, which is nothing but gross profit carried down. To continue with the profit and loss account, what gross profit carried down we have, that should be brought down to the profit and loss account. So in the next line of the total, gross profit brought down in the credit side 24,800. So now whatever indirect expenses we have, we are going to record in the debit side, and whatever incomes we have, we are going to record in the credit side. So let us take down the entries what we have. We have in the debit side discount allowed 1,400, bad debts 1,800, expenses paid 6,000, and 1,200 outstanding is given in the adjustment that we are going to add here. Add outstanding expenses 1,200, then to the outer column 77,200. Then we have rent paid 2,500, then depreciation on furniture in the inner column 1,500, and depreciation on motor van 800, and total depreciation will be 2,300. Then we have provision for bad debts 2,430, and we have discount received. So whenever the discount is received, it is an income that will be recorded in the credit side. Discount received 1,000. So once we are done with all the entries and adjustment, we have to close the profit and loss account to find out the net profit. So when coming to the credit side, we have excess total, which is 25,800. The same total will be recorded in the debit side, 25,800 minus all the expenses. Difference we have 8,170, which is nothing but net profit transferred to the capital account. After preparing trading and profit and loss account, the final statement we have to prepare, which is nothing but balance sheet. So the title will be balance sheet as on December 31st, 2006, and the format will be liabilities amount, assets amount. So let us take the entries in the liabilities side first, where we have outstanding expenses 1,200, then we have creditors 27,000, then we have capital 81,500 less drawings 5,000, then the balance will be 76,500, add net profit 8,170, and amount to the outer column 84,670. So once we are done with the liability side, let us come to the asset side, where first we are going to take the cash balance, which is the closing balance of cash 8,000. Then we are going to take debtors 48,600 in the inner column, less provision 2,430, and to the outer column 46,170. Then closing stock 30,000, furnitures and fixtures 15,000 the actual price, less depreciation 1,500, outer column 13,500. Then motor van 16,000, less depreciation 800, and outer column 15,200. So once we are done with all the entries, the balance sheet should get same total for both the side. So where we have for the liability side 1,12,870, and same for the asset side 1,12,870. So here we have prepared the final accounts with the incomplete records, and the both trading and profit and loss account and the balance sheet were tallied.